On July 24, 2026, the world's largest rocket cleared the launch tower in South Texas. Starship's 13th flight test blasted upward with millions of pounds of thrust, executing a near-flawless ascent. Minutes later, it released 20 next-generation satellites into orbit, and the upper stage glided back down to Earth for a controlled, soft splashdown in the Indian Ocean. This chart compares Starship's physical trajectory against its financial one. While the rocket soared, the public stock slumped 16% below its $86 billion debut. Short sellers now control 32% of the available shares. The February all-stock merger with XAI transformed the business into a sprawling conglomerate valued at $1.25 trillion. By welding Musk's artificial intelligence venture directly onto the aerospace company, SpaceX traded its singular focus for a more complex, high-risk corporate structure. Wall Street investors aren't doubting the physics of the rockets. They are recoiling from the financial math of this vertical megastack, retreating from the massive risk of funding an untested corporate empire. The foundation of SpaceX's business is straightforward. They use their own low-cost rockets to launch thousands of satellites, building a global internet network they own and operate. This financial report shows the success of that foundation. SpaceX generated $18.7 billion in revenue in 2025. Starlink alone accounted for $11.4 billion of that, while bringing in $4.4 billion in operating profit. But scaling that profit center hit a physical limit. To handle more network traffic, SpaceX built the Starlink V3. These satellites are so heavy that legacy rockets like the Falcon 9 cannot carry them efficiently. They require the massive payload capacity of Starship to reach orbit. That is why Flight 13 mattered. By deploying 20 operational V3 satellites, Starship proved it can clear the physical bottleneck holding back Starlink's expansion. If SpaceX consisted entirely of this transport and communication layer, it would operate as a highly lucrative infrastructure monopoly. However, management aggressively bolted a speculative digital layer on top of it. That brings us back to the February 2026 merger. SpaceX absorbed XAI in an all-stock deal, combining the aerospace company's $1 trillion valuation with the AI startup's $250 billion price tag. The long-term vision is to route XAI's computing power through the Starlink network. They plan to build data centers in orbit and eventually beam those AI capabilities directly to consumer mobile devices. The present-day finances paint a different picture. Last year, XAI brought in $3.2 billion in revenue, but posted an operating loss of over $6.3 billion. On top of that, they spent $12.7 billion on physical infrastructure. This report details SpaceX's upcoming capital requirements, specifically Terafab, a semiconductor facility in Texas projected to cost $119 billion. The filing explicitly notes a genuine risk of bankruptcy if Starship fails to meet a blistering launch schedule to cover these AI costs. Constructing a three-layered space and AI conglomerate demands capital on a scale that private venture capitalists can no longer support. This chart visualizes SpaceX's funding history. The massive green spike in 2026 represents the June IPO, an $86 billion capital injection. To ensure this succeeded, SpaceX secured early inclusion in the NASDAQ 100, forcing mutual funds to buy the stock, guaranteeing billions in passive investment. Even with that $86 billion injection, analysts at Morgan Stanley project SpaceX will burn through another $700 billion over the next decade before reaching positive free cash flow. The IPO served a very specific structural purpose. It transferred the immense financial risk of these AI ambitions away from private capital firms, placing it directly into the portfolios of everyday retail investors. For 20 years, SpaceX operated under the protection of private ownership, where they could absorb losses in the name of progress. Now, every misstep is priced by Wall Street in real time. The company faces its first major test of this new reality on August 4th, when it releases its first quarterly earnings report as a public company. That date brings intense pressure. The earnings release triggers a lockup expiration, allowing insiders to sell their personal shares for the first time, which could flood the market with up to 911 million shares. The market is currently watching a collision between two massive forces. Can the physical engineering successes of the Starship program outpace the crushing financial gravity of XAI's cash burn. SpaceX today represents a $1 trillion wager that the ultimate AI monopoly will be built in Earth's orbit. The romantic vision of Mars has been superseded by the immediate financial demands of the megastack, and the public is now footing the bill for the gamble.